You've highlighted inflation as a very big concern in Kenya because of the impact it's having on economic growth. Run us through the inflation scenario as you see it.
Thank you very much. Yes, we released a report today that indicates that economic growth could slow this year because of a number of challenges. As viewers may remember, last year we had a very good economic environment because inflation almost hit the low levels at about 3.1% allowed June, July. But I think we have seen a reversal of that. And as at end of June this year, the level of overall inflation is about 14.5%, which we feel is on the higher side. And there are a number of factors that has contributed to that high level of inflation. Of course, one of them is the food deficit. Kenya, we are having a food deficit at the moment, and we have already had the Ministry of Finance allowing importers to come in and try to, to reduce that deficit. And it is a clear indication that there is a shortage of food, and as a result, the prices of many commodities have gone up. At the same time, the international crude oil prices have been rising, and those have had another impact on the commodity prices in the market, especially imported commodities, because the prices have been much higher. We have seen a weaker Kenya shilling. The weaker Kenya shilling, whereas we are more of an importing economy, because on balance, we import more than double what we export. So in a situation where the currency is weakening, it tends to inflate the level of inflation. So we think there is more challenge for this economy this year.
Yeah.
Whereas the government maybe feels that we can see a growth rate of about 5%. I think we are more cautious because the economic fundamentals have worsened this year compared to what we saw last year.
What kind of outlook do you have for the shilling right now? Because we've seen a central bank intervene within that market, and it hasn't been very successful in having any strengthening effect on that unit. As you say, it's a weaker shilling that continues to plague the economy right now.
Yeah, I think the fact that the central bank has started talking tough, I think in my view has reduced the speculative activity that we saw in the last 1 month or so. But I think the fact that international crude oil prices are still high, and there is no way we can tell whether we have seen the worst, because the situation in North Africa, Middle East is still very unclear, because if the international crude oil prices could move higher, then that means we would have to need more dollars to be able to import oil. When you look at our balance of payment position, that one has narrowed to about 199 million US dollars as at the beginning of this year, compared to about 849 US dollars millions about 12 months ago. So we have seen the balance of payment position actually narrowing considerably, and this is an indication that maybe the dollar inflows are not as significant as one would expect to be able to support the shilling on a long-term basis. Of course, we know that the central bank and treasury are in an arrangement with IMF, whereby IMF could provide support. But I think we need to see more of portfolio inflows and more of exports, bringing in more dollars to be able to sustain the shilling trade on a long-term basis. For now, we think that the shilling could remain weak. Yes, we have seen some stability, but I think possibly for the short term there could be some stability, but I still feel that there could be a risk on a long-term basis for further weakening. But I think for now, over the next 3 months, we are confident we could see stability at the current levels, maybe about 87, 90 level.
There are, of course, benefactors of a weaker shilling that stand in the economy, your tourism sector, your agricultural sector as well. But a less obvious one, perhaps, is the banking sector as well, where we've had the volatility of the Kenyan shilling benefiting the banks due to enhanced foreign exchange trading income.
Yes, I think that is one of the areas the central bank is keen to monitor to make sure that there is fair dealing in the market, and that the commercial banks do not unduly influence the direction of the exchange rate for just driven by profit motive, because that would have a very negative impact on the overall economy. So we believe that central bank is going to continue monitoring that sector, and therefore make sure that they only deal what is manageable and not try to speculate over the long term.
Within this context, Peter, where are you identifying investment opportunities within the Kenyan market right now?
I think within the Kenyan market, we have seen the level of interest rates moving up significantly. We know at the beginning of this year, the 91-day Treasury bill rate was about maybe in the level of 3%. And then we have seen a significant upward movement to about 9%. And even on the long-term end, if we look at the bonds, we are seeing a 2-year in the range of 12%, and a 10-year bond maybe at about 13.50%. So in terms of the fixed income, it looks very attractive at the moment. Of course, there is a risk that the level of inflation is rising, but as a long-term investor, you need to average your returns over time. So the fact that there is a risk in terms of inflation at the moment, we do feel that inflation is going to come down next year. So long-term investor getting a yield of about 13.50 to me is an attraction. The other thing is that in the stock market, of course, there are still some pockets that are attractive. When you look at some valuations, some of the companies do have single-digit price-earning ratios. And therefore, for somebody who is looking for an opportunity to invest long-term, possibly this could be another opportunity.